Hello and welcome to the session in which we would look at emphasis of a matter or other matters paragraphs as it relates to review engagements. Because the reason I'm emphasizing review engagements because we also see this in the audit report if we conduct an audit. So in a review engagement, we establish an understanding with the client, gain sufficient knowledge of the entity and the industry, conduct analytical procedures, inquiries, perform other procedures, obtain a rep letter, use our professional judgment to evaluate the result, then communicate the results. Now, within the results, we have to issue reports, and sometimes we have to do within those reports, we have to have emphasis of a matter or other matters paragraph as part of the report. So this is basically a subheading of the reports themselves. This is what we will discuss, focusing on emphasis of a matter and other matter paragraphs. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great, you are looking for some additional help and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
Starting with emphasis of a matter paragraph. This paragraph is used to draw attention, to call the users to look at something more specific because you want them to look at it that is appropriately disclosed in the financial statement. And this is important. So the matter that you are drawing attention to, it's already in the financial statements. And remember this statement because when we looked at other paragraphs, you're going to see it's a little bit different. So emphasis of a matter, the thing is already disclosed in the financial statement, but you believe it's important enough that you want to draw attention's users to it. Now, what are those? Well, when you revise financial statements after the report release, if that happened, if the financial statements are revised because of significant fact discovered after the report was released, and the report changes, you want to emphasize this in an emphasis of a matter. You would add that report. Another circumstances is when you use a special purpose entity like cash, tax basis, contractual, regulatory. If the financial statements are prepared under a special purpose framework, an emphasis of a matter is required. Now also additional things are required when use of a special purpose framework is used. A review report prepared in accordance with this other, which is special purpose framework, should include acknowledgement from the management that they are responsible for what? For determining the appropriate financial reporting framework. So they're the one who chose that. If we use regulatory or contractual basis, if this is the basis, if we follow this, the report will have to explain the purpose for preparing the financial statement. Why? Because it's if contractual, for what purpose, regulatory, or refer to the appropriate note in the management responsibility. So we have to explain that. Also, other matter paragraph should be included restricting the use of the accountant's report. Now, this is again a use of other matter paragraph, the fact that we want this report to specific people, to specific group. Why? Because it's either regulatory based on specific regulation that certain people understand, or contractual basis, basically what we agreed with the client. So we would use under those circumstances what we say other matter paragraph. Also, the use of special purpose framework, the accountant must adjust the review, qualify or adverse if the financial statement do not contain. So if we're using special purpose framework, sometime we might have to qualify or issue an adverse conclusion if the report does not contain a description of the special purpose framework. So if you are using special purpose framework, put in the notes, describe the special purpose framework. If not, well, depending on, the adversity of the things, we might go with qualified or adverse. A summary of significant accounting policy, an adequate explanation of how this framework, how this special purpose framework differ from GAAP. Okay? Although the effect of these differences do not have to be quantified, but you have to explain it. It doesn't have to have a dollar amount, just explain the difference. Disclosure that are similar to those required by GAAP when the financial statement contain items comparable to those in GAAP. So if you don't contain those, then the accountant can issue a qualified or adverse opinion. Also, when emphasis of a matter paragraph is required, when we have comparative financial statement with a changed reference to a departure from a framework. When we do that, and we're going to look at this in a separate recording, if prior financial statements included a departure from the financial reporting framework and the reference of that departure change, an emphasis of a matter is necessary. Also, when we are looking at comparative financial statement with a prior audit, so the prior year was an audit, this year is a review. Why would that happen? Last year, the investors or whoever requested the financial statement wanted an audit, for example, the bank. This year, they're okay, they're more comfortable with the company, they get to know the management, or there was some changes in the relationship, then they accept a review. So last year it was an audit, this year is a review, emphasis of a matter paragraph. Supplementary information accompanying the financial statement. If the financial statement includes supplementary information like disclosure required by regulatory agencies, emphasis of a matter may be necessary. Also, if you have a going concern issue, if the accountant determined that there is a doubt that the company cannot stay in business as a going concern, an emphasis of a matter must be included to highlight this uncertainty. Now, why would that happen if the company is experiencing losses? Liquidity, they don't have enough cash. Then when we have going concern, we have to be very careful. The auditor should review management evaluation of the going concern, inquire about management plan to address any issues. Now what would happen is this: usually when a going concern issue is there, management is aware of it, you're aware of it, then you have to ask them and talk to them. Tell me, what are you doing to address this issue? What are you doing basically to catch your breath, to get the cash, to generate the revenue? Then, and determine whether disclosure about going concern are adequate. Then you would look at the disclosure. Is this enough that I'm comfortable with? If, after considering the circumstances and management plan, so they'll tell you, for example, one of our investors is planning to dump $500,000. We're planning to open our online business. We are planning to increase our marketing budget to increase sales. Yeah, then they may choose to include, but are not required to include emphasis of a matter report. So once they talk to you, you have the option of adding this paragraph or just saying, okay, I think I'm good. I don't have to disclose this, because kind of they convince you that they are doing what they're doing, and you say, you know what, it's not needed at all, or it might not be needed. If concern about going concern persists, they tell you this is what's happening, you'd say, okay, that's fine. I just want to include a separate section called substantial doubt about the entity to continue as a going concern. That's fine too. So you have the option of not mention it, or you have the option to mention it based on what they told you and what's the accountant judgment. This section would highlight the relevant note in the financial statement and indicate the auditor's conclusion is not modified regarding this matter. Now, as long as you did everything, you have all the disclosure, and you explain it, and you're comfortable, that's good. If the disclosure is not adequate, then you either qualify or adverse. So one thing, you don't have to do anything. Just, it's a going concern, but they spoke to you and it's done. Two is, you know what, I want to have a paragraph and have in the note. If the note are not enough, you believe they're not disclosing enough, you'd issue a qualified or adverse depending on the severity. Now, what should you do now? You want to go to Farhat lectures, whether you are an accounting student or a CPA exam candidate. Look at additional resources, previously released AI CPA questions, additional multiple choice that will help you, whether you are studying to pass the exam or in your auditing course. Good luck, invest in yourself, and stay safe.